Recently, I've made my first single stock addition to my portfolio, which was Amazon. And I made a whole video about it, reviewing the stock. And it seems some of you enjoyed it. So I thought I'm going to continue this once in a while, reviewing specific companies. And quite a few people asked me about Tesla. And why Tesla? Well, in addition to being one of the most frequently traded stock out there, it recently, since the beginning of the year, dropped by almost 35%, which is obviously a massive correction. And some of you might be wondering whether this could be a good entry point to open a position in Tesla or not. So in this video, I want to break it down, go through the stock and share with you my thoughts, what I think about it, and whether I'm planning to add Tesla to my portfolio. But jumping back over to Seeking Alpha, once again, we see the major correction that has taken place. Now, if we zoom out further to a 1 year period, we're still up 47%. So we shouldn't be forgetting that. But of course, we do see, since the beginning of the year, which interestingly enough coincides with him being pretty much the right and left hand of President Trump. Well, we'll get to this a little bit later. We have seen that correction, kicking in all the way here from January. Of course, in a 5-year time horizon, you would have done very well with Tesla if you would have kept the stock since that time period. Now, if we look over to the valuation, right now it's valued at around $844 billion. Now, again, it might not mean that much if we think about that number. So I always like to put it into perspective with some other companies. For example, Volkswagen, which used to be one of the biggest car producer in the world. Well, just as a comparison, and I know it's not really apple to apple, but just to put things into perspective, that's less than 10% of the value of Tesla at only $59 billion. Now, I understand it's a European company and usually their valuations are way less, irrespective of their revenues and profits. That's just how the US market works. But this really shows you a major difference in the valuation between those two. But then again, obviously Tesla also has a different business model, right? The short interest has been increasing now at 1.91%. That basically means more and more people are betting against Tesla, as those investors will make their money as the share price of Tesla keeps on dropping. Especially when we look at the PE ratio of 92, that's definitely one of the highest ones I've seen. Now, yes, Palantir is now at 152, which in my eyes is absolutely crazy. But when we look at Apple, one of the most valuable companies in the world, it's only at 32. So it's a fraction of what Tesla's is. I always take those valuations with a grain of salt because obviously different companies have different evaluation methods, right? If I look at Coca-Cola, right, that's a kind of boring, predictable business model. Naturally, I would apply a different growth factor evaluation method than if I evaluate a purely AI-driven company or a chip manufacturer. They have different metrics. That's normal. So I totally get it. But at 92, that's really very high despite the price coming down. Now, in terms of revenues, it has obviously grown over the years. However, from 23 to 24, the growth pretty much flatlined. And now in 25, again, they make their forecast of growth. However, when you look at the first few months, I'll come back to this in a second, it actually seems to struggle quite a bit, especially in specific countries. Sales are dropping quite significantly. So I'm not sure they're going to be hitting those targets. And if they don't hit those targets, obviously that will have a major impact on the price going forward. Now, in terms of profitability, you can see here an A+, which is really nice to see from Seeking Alpha, given their various margins, which are looking very healthy for a car company. Net income margin at 7.26% is really very good. Coming back to Volkswagen, their net income margin is only 3.97%. Now, if I was to compare Tesla to the S&P 500, yes, it did actually manage to outperform the S&P so far, 47% over 1 year period compared to 13%. And I look at total returns despite Tesla not paying any dividends. So I want to compare apple to apple over a 5-year period. Even more, right? 127 versus 548%. But over the last month, actually, it dropped also significantly more than the S&P 500. So that's why I'm obviously always a big fan of investing majority of my money into the S&P 500, because that way I'm just more diversified and have less volatility. But let's have a look at some of the ratings. More or less right now, most of them are saying hold because there's a lot of uncertainty. They're not too bullish about it, but also not too bearish. So they're kind of saying, let's have a look where it develops. The same. If I look at Seeking Alpha Analyst, pretty much the same, a hold rating over here, which has more or less stayed the same, since quite a while over here. Then we also have the Wall Street Analyst rating over here, which also, no surprise, says hold. So you can see that has also been for quite a while. Now, I also always like to look at the analysis because that's really interesting what people are actually writing about. And I really like the headline, Tesla promises while BYD, one of the biggest competitors and now biggest EV producer in the world from China, delivers. And you can see that over here in 2024 was the first time that BYD from China actually outsold Tesla globally. So that's really impressive because in the past you can see the red bars over here, Tesla clearly outperforming BYD, but they really quickly caught up. And I think that trend will only get more and more because BYD, those cars, which by the way actually look pretty slick now being based in the UAE, I can tell you there are more BYDs here than Teslas for sure. And yeah, as I said, actually look wise, I really prefer them actually to Teslas. They look really slick, even more luxurious than the Tesla on the inside. And best of all, they're way cheaper. That's why so many people rush to buy those Chinese cars, of which there are so many different brands. I can't even remember all of them. But definitely those ones are leading the pack right now. And that's why they're outselling Tesla. And when we look at the EV sales in China, which is arguably one of the biggest market, if not the biggest market in the world, well, you can see here BYD dominating with more than 26% of the market being sold by BYD. And then we have a couple of other, Chinese brand, obviously so many out there, it's hard to keep up with them. And Tesla only managed to sell less than 5% of all the EV cars over there. And I personally think that number is only going to be dropping in light with all the tariff wars going on between US, China, and all other countries involved. So yeah, that's not really helping them for sure. In the meantime, if we actually jump over to BYD, they've been really on the run. Over a 1 year period, up 86%, absolutely unbelievable numbers, while the valuation, the market cap right now is only 139 billion compared to the 800 billion we've seen of Tesla. And the PE is only 27, so around a quarter, again, of the one that Tesla had. But in addition to the pain we've seen already, I think personally, we're going to see even more pain going forward. Just look at those numbers coming out of Europe, for example, Norway, Sweden, Denmark, where the sales of Tesla has been dropping massively. In Germany in February alone, it has dropped by apparently 76%, a major drop. So what are the real reasons behind the drop in sales as well as the share price? Now, obviously, there are quite a number of them. First of all, we just spoke about BYD, which is a major competitor. They offer amazing quality for a much lower price point. They're much more attractive, right? So people go for it. In times of high inflation and people struggling with their money, of course, you want to save some money and go for the cheaper option. And all those new tariffs coming out of the US are certainly not helping, because if they go ahead and slap all those tariffs on different countries manufacturing cars and other things, well, guess what? Those countries will retaliate, as China, for example, said as well, and they will put tariffs on US produced goods. For example, also Tesla, right? Which makes them even more expensive, and less people abroad will buy their cars. And personally, I think what's even more contributing towards the drop in sales is actually Elon Musk's involvement in all those political statements and comments and decisions that he's making as the right and left hand of Donald Trump. He really seems to be the spokesperson of the White House and makes so many random statements. And of course, a lot of people really judge him by his political movements and things he says. A lot of people feel really strongly about that and therefore either cancel their existing order or even sell their current cars. And of course, that's never a good thing, right? If in the end it becomes more about the person, the CEO, the leader of the company, than the actual company or product itself, which sadly seems to be happening. And obviously, we can see the numbers speak louder than words. Since Elon Musk went to Washington, his sales and share prices have been falling. So he really hasn't done himself or shareholders a favor. And it doesn't seem to be changing anytime soon, because when we look at the insiders, what people who are within the company are doing with their shares that they have in Tesla, well, majority of them are actually selling. You can see over here from March, so we have really the latest insights. The CFO recently sold 718,000. Another director sold worth $33 million worth of Tesla shares. Again, the CFO sold for another $1.7 million. Congress members selling. Well, you look at the buy, but that's really a tiny buy, $1,000 to $15,000, so really nothing here. Then again, selling. CFO once again selling. The CFO sold like crazy. Another $2.7 million he sold worth of the shares. Once again, the CFO selling. Absolutely unbelievable. Crazy numbers. So for me, that's never a good sign, because obviously they know much more than we ever will do, right? We see the reports, we see some numbers, but retrospectively, here we see people working inside the company, knowing the ins and outs, what they do with their money and where they feel the stock price is headed. If they were to see a huge upside coming anytime soon, they would be holding on to the shares and sell them at a later stage, right? I'm sure they still have some shares. They're not liquidating all their positions, but they're taking profits, meaning that they still think that the price is rather high and that it might be falling even more in the future. Now, I know what all the Tesla shareholders are saying, but Kai, Tesla is so much more than just an EV company. And I totally get it, right? They're obviously working on the robo-taxi coming very soon. They do some pilots very soon. So I think there's more to come on that. They're working on the humanoid business. So I don't know if in the future they will split it up into a separate entity or it will all be under Tesla. We shall see. But I think, of course, there will be a huge driver for them also to lower the cost and improve efficiency. Totally get it. And of course, the energy generation and storage segment part of the business is also there, which will definitely play an ever increasing role in the future. Does that justify those crazy valuations? Those companies like BYD and others are also working on pretty much similar things, and they might have a cost advantage and bring down the cost even further ahead of Tesla. And self-driving is also available in some of those cars. So yeah, is it worth 4-5 times the valuation of a BYD or other companies? I don't know. Ultimately, it's your choice, but I would be very cautious with this, especially since the CEO, unfortunately, in my eyes, is really focusing seemingly on so many other things rather than on the core business. And don't forget, he's still running many other businesses. And irrespective of what you think about Elon Musk, his political views and so forth, I'm not a political channel. I have my own thoughts, but I still have to give him credit for what he did to get there, right? His innovation, his drive has been tremendous. And in the past, he was really loved by so many people. And really, he did amazing things. His work ethic, unbelievable. However, I think now, unfortunately, he's really leaning too much into all his political career and statements and all these crazy things and tweeting half the day on X. So I think it's really unfortunate because it really takes away from all the amazing things he achieved so far. And I prefer investing into a business that outlasts its CEO. And if Elon Musk was to leave tomorrow, I really don't know what would happen to the stock price. On the one hand side, I could see it going up because investors would then get more excited about the actual product and innovation that's going on in Tesla, while others might completely lose faith because he really is the face of the company. So I just have no idea, and I wouldn't want to base all my investment decisions and actual money on one person at the head of the company. I don't think that's the best way to go about it. Now, if you believe the future of Tesla is bright because of all the things they're working on and they will bring down the prices and the trading war is not affecting them, well, then go ahead and invest in them. From my point of view, I would definitely stay away from Tesla at this stage. Now, if they were to drop another 50-60% in price, which may or may not happen, we don't know, then maybe I would look at it, but more likely than not, I will not be investing as long as he is doing the things he's doing, running all those different companies, being so politically involved. I think is never a good thing. Can you have an opinion, express it online? Definitely. I think there's nothing wrong. I think as a leader, you have to put yourself out there. But if you're really so deep in the political matter and really making yourself more enemies than friends, I just don't think it's really business sense and a smart decision. So for time being, Tesla for me definitely is a pass. But I'm interested to hear from you. Would you buy it, sell it, hold it? Let me know in the comments down below. Next up, check out this video over here. As always, stay healthy, get wealthy, and I'll see you in the next one. Ciao.